If you're applying as a home improvement contractor in Maryland, you may have to purchase a special type of surety bond, and that's why in this short video, I'm going to help you understand when Maryland requires a contractor bond, what a contractor surety bond is, how to purchase your bond for the lowest possible price, plus links to additional resources. This will be a fast video, but before we dive in, if you would do me a favor and hit that like button, it's going to help YouTube give this video a little bit of a boost, which would be great, and you'll be doing me a huge favor. So let's start talking about this bond, but first we have to start with the Commission's Guaranty Fund. The Maryland Home Improvement Commission has a Guaranty Fund. This is a collective fund that's paid into every single year by all licensed contractors. The money in this fund is available to any customer who is purposefully and financially harmed by a contractor. Examples of fraudulent actions by a contractor can include failing to complete a project, failing to start a project after collecting a deposit, swapping out materials on a project to save money without telling the customer, refusing to pay subcontractors for work completed. So if a customer is harmed by any of these actions or similar ones, they can make a claim to the Guarantee Fund for financial reimbursement. And the Guarantee Fund, if they deem the claim to be valid, they will pay out only up to $30,000. The guilty contractor is going to be responsible for paying the Guarantee Fund back the amount of money for that claim. And this is why one of the licensing requirements in Maryland is a $30,000 net worth. The Maryland Home Improvement Surety Bond. If you can't meet the $30,000 net worth requirement, you can purchase a surety bond instead. At a high level, a surety bond is a legal contract that acts as a guarantee that you will follow all rules, regulations, and contracting laws in Maryland and follow through all of your contracting promises to your customers. The purpose of this bond is very similar to the Guarantee Fund, and it also has to match that $30,000 amount. But this is where things get a little bit different. So if a contractor financially and purposely harms a customer, the customer can make a claim to the Guarantee Fund for financial reimbursement. And if the Home Commission Guarantee Fund deems the claim valid, they'll pay out that claim. If the contractor, or if the guilty contractor cannot pay back the Guarantee Fund the amount of the claim, the Guarantee Fund will make a claim against the contractor's surety bond to get the money to pay them back. And keep in mind, this also means that once you hit that $30,000 net worth requirement, you no longer need to purchase this bond. One more bond requirement I just want to mention because it is something that you may just kind of look at, but we barely ever sell this bond. During the licensing process for a home improvement contractor, you're going to be required to provide a financial report and a credit report. If you choose to provide neither of those, you will have to purchase a $100,000 surety bond. But again, nearly every customer you've ever helped always just provides that information. So if they do have to purchase the bond, they can get the $30,000 one. How much does this surety bond cost? Unfortunately, it depends. It's going to be based on a rate from a surety. A surety is just the insurance company that underwrites this particular bond. And every single surety is different on how they assess the applicant. But they will look at similar factors such as the personal credit of the owner or owners, past contracting experience, and any prior bond claims if the owner has been licensed in the past. So based on this information, they're going to quote a rate, and this rate multiplied by the $30,000 bond amount is the price that you pay. And this is why it's so important to work with a specialized surety agency like Surety Bonds Direct, because we have a network of A-rated sureties that we can price shop for you, find you the lowest possible rate, which means you're going to pay the lowest possible price. For Maryland contractors, we typically see rates pretty much as low as 0.5% to about 3%. This means that you're going to pay anywhere from $150 to about $900 in that range. And as you can see, this really does make a difference then. If you can find the lowest rate, you can save hundreds of dollars. And that's why you should click on the link in the description, go get your pricing so that you know what this actual price is. There is no obligation for you to purchase anything, so it's just free information that you can use to make the right decision when it's time. Renewing your contractor bond. The home improvement bond has a bond term of 2 years. This is another great reason to work with Surety Bonds Direct because your bond specialist will contact you 30 to 45 days in advance of your bond expiration. The first thing they're going to ask you is, do you still need the bond? Because remember, if you hit that $30,000 net worth, you don't need it anymore. But if you do need it, they'll already have pricing ready to go for you so you can just pay the renewal premium and keep your bond active. That's the Maryland Home Improvement Contractor Bond. This contractor bond, it's a pretty unique bond compared to most other bonds in other states. But at least now you understand what the bond is and why it's required. Plus you can see it's not a very complicated process to get yours. The only thing you have to do right now is click on the link in the description and go get your pricing. That way you can make the right decision for you and your business. If you have any questions, leave them in the comments. I'll make sure I answer them or help you get the information you need to go in the right direction. Now, if you got value from this video, do me a favor and hit that like button. It's going to help YouTube give this video a boost, which will be great for me, and you'll be doing me a huge favor. Thank you for watching, and good luck in your business.